Whales are moving behind the scenes, why Bitcoin could move while everyone ignores it. Bitcoin's price looks stable this week, but the numbers tell a very different story. Millions of BTC are moving quietly between wallets, shifting off exchanges, entering cold storage, and accumulating in addresses most investors never see. These flows are not visible in headlines. They do not show up in price charts, and yet they could quietly shape the market before anyone notices. Most traders focus on volatility, the latest tweet, or the daily candle. But the real driver of Bitcoin's next move is hidden in supply dynamics, whale accumulation, and institutional positioning. These forces often operate silently beneath the surface, while retail investors react to visible price swings. In 2017, Bitcoin soared to its first massive highs. Most investors thought it was just price momentum. But behind the scenes, the big money, the whales, had been quietly stacking for months. They bought strategically, like moving coins into long-term storage, ensuring that when the market shifted, they controlled a large portion of the supply. Their accumulation went unnoticed by retail investors, who were often caught chasing trends. The result? When whales finally made coordinated moves, price exploded, catching the majority of traders by surprise. Fast forward to December 2025. We are seeing a similar pattern. Whale wallets are active. Dormant coins are awakening. Institutional flows are subtly shifting. Yet the market appears calm. Price moves are muted. Headlines call it a flat week. This is the story few investors see, a silent reshaping of Bitcoin's market structure. The dynamics of supply and accumulation are creating conditions for potential volatility in the future, even if the charts look calm today. Bitcoin was designed to be transparent. Every transaction is recorded on the blockchain. Anyone can verify transfers, wallet balances, and historical movements. But transparency does not mean visibility. The data exists, but most investors do not know which flows matter or how to interpret them. Whale wallets, addresses holding thousands of BTC, can accumulate or redistribute coins without triggering noticeable volatility. These movements can silently reduce liquidity, affect market depth, and set the stage for future price action. This week's on-chain data shows a surge in whale activity. Nearly 47,500 BTC moved into large wallets in early December 2025. That represents millions of dollars quietly stacking away from retail visibility. Dormant coins, wallets untouched for years, are now moving. These are not casual transactions. They represent long-term holders repositioning. Each coin that shifts from dormancy to activity changes the market supply imbalance, subtly influencing potential price outcomes. Let's break down what is happening under the surface. First, cold storage movements. When BTC moves from exchange wallets to cold storage, it removes liquidity from the market. Less circulating supply means that even modest buying pressure can have a disproportionately large impact on price. Observing these movements provides insight into the intentions of large holders and long-term market structure. Second, options expiry timing. Bitcoin faces a massive $23 billion options expiry this week. Historically, whales coordinate accumulation or distribution around these dates to manage risk and maximize advantage. The invisible nature of these flows makes them hard to detect in price charts, but they have a profound effect on market stability and potential volatility. Third, ETF flows. Institutional ETFs are quietly adjusting holdings. Recent data shows net outflows that reduce immediate structural support. These flows may not trigger headline volatility, but they subtly alter market mechanics, affecting liquidity and the potential responsiveness of the market to buying or selling pressure. Fourth, dormant coins awakening. Thousands of coins that have been dormant for years are now moving. Historically, these awakenings often precede accumulation cycles or strategic redistribution by large holders. Understanding these patterns allows investors to track where significant supply is becoming active. Fifth, supply scarcity pressure. With ongoing exchange withdrawals and continuous whale stacking, the amount of BTC available for trading is decreasing. This reduced availability does not generate headlines, yet it fundamentally alters market sensitivity. Even minor buying pressure in such conditions can create amplified price movements. Most investors focus on price charts, but the real signals are on-chain. Whale accumulation, dormant coin activity, and liquidity shifts reveal what the market is truly doing. Observing these forces provides a deeper understanding of Bitcoin's structural trends beyond the surface-level price movement. Examining the data in detail provides clarity. Whale accumulation is significant. Nearly 50,000 BTC moved into large wallets this month alone. This represents a strategic positioning trend by those who control a large portion of circulating supply. Dormant coins are reactivating. Thousands of BTC that have not moved for years are now entering active circulation. This pattern indicates either repositioning by long-term holders or preparation for future market engagement. ETF flows show institutional adjustments. Net outflows are slightly reducing structural support. Although these flows may not immediately impact price volatility, they alter the supply landscape for institutional investors and affect overall liquidity. Exchange liquidity is also declining. As more BTC leaves exchanges, the amount available for active trading diminishes. This scarcity layer can magnify the effects of even moderate buy or sell orders, creating conditions for amplified market sensitivity. When these factors are combined, the market becomes highly sensitive. Even small changes in demand, macroeconomic news, or strategic whale movements could trigger outsized reactions in price. But this is not speculation. Each metric is measurable. Each trend is observable on-chain. By understanding these dynamics, investors gain a significant advantage as they can interpret market conditions beyond superficial price movements. Additionally, analyzing historical trends provides context for this week's movements. In prior cycles, similar patterns of whale accumulation, dormant coin activity, and exchange withdrawals preceded notable periods of market activity. While past performance does not guarantee future results, these patterns highlight the importance of tracking supply dynamics and large holder behavior. On-chain analytics tools provide critical insight. Metrics such as realized cap, whale wallet balances, exchange inflows and outflows, and dormancy patterns give investors a comprehensive view of the market's internal structure. By focusing on these indicators, one can understand how the market is quietly evolving, even during apparent periods of calm. Understanding the psychology of market participants is also crucial. Retail investors often react to short-term price fluctuations and headlines. Their decisions tend to be influenced by fear, hype, or emotional responses. In contrast, whales operate strategically, often accumulating or repositioning silently. The gap between retail perception and large holder activity creates conditions where price may move in unexpected ways once these forces interact. Monitoring on-chain metrics allows investors to see these hidden forces at work. Observing whale accumulation, dormant coin movements, and liquidity changes provides a roadmap of where the market may be heading without relying on speculative news or surface-level price trends. Finally, evaluating macro-level Bitcoin supply and market structure is essential. Exchange balances, total circulating supply, long-term holder metrics, and institutional positions collectively shape the market environment. As these factors shift, even without immediate price volatility, the underlying market becomes more sensitive to external stimuli. By analyzing these data points systematically, investors gain insight into the forces quietly shaping Bitcoin's trajectory. They can anticipate potential shifts, understand the rationale behind observed trends, and identify where market pressure may build. Combining all these elements, a clear picture emerges. Whale accumulation is increasing. Dormant coins are awakening. Institutional flows are subtly adjusting holdings. Exchange liquidity is declining. These trends collectively indicate that Bitcoin's market structure is quietly evolving, even if prices appear calm. The market's sensitivity is rising, and those who understand the interplay of supply, accumulation, and liquidity have an informational advantage. By focusing on measurable, verifiable on-chain data, investors can interpret market conditions more accurately than by relying on headlines or price charts alone. If you want to stay ahead of the market, it is not enough to watch price charts. You need to understand the forces moving Bitcoin behind the scenes, the whales, the dormant coins, and the subtle shifts in liquidity that most investors miss. At MoneyHub, we bring you data-driven insights that cut through the noise, giving you a clearer view of the market. Subscribe now, follow MoneyHub, and join the conversation. Stay informed, stay ahead, and see the market the way the pros do.